Hi, it's me, CryptoGit. Did over 5,000x in crypto. Now I'm documenting my journey, everything on YouTube for everyone that wants to learn more. So there are two simple components that the rich keeps getting richer while the retails and 99% of average investors here don't understand. So the first one is smart money focused on the response and not what's happening. And this is a very crucial concept that a lot of people don't get. And here's one chart and one data which actually confirms what I'm telling you right now. So this is basically stock market, gold, and actually Bitcoin through major crisis. So what is the performance, and why I show you this is because I need you to watch how the retails acts and how the smart money acts. So the difference between the retail and the smart money is that smart money is always constantly looking for what's next, what's coming, what would be the response from the government, what would be the reaction, while the average investor is constantly thinking it's over, it's done, I'm losing my job, I'm losing my investment, it's everything going to zero. And this chart exactly, this table exactly confirms that. So this is the data that I could have found for Bitcoin, because usually for S&P 500 is a lot, but I'm calculating for BTC since 2020. So here we got the events, and here we got the dates when they occurred, and here we got the 10 days return and 60-day returns. What usually happens when a big major crisis occur is that usually the assets, risk assets like S&P and even BTC, stock market and BTC, just dip on the first days, because it's like the shock that people experience where they don't know how to react. Like, uncertainty is very bad for the average investor because they're always thinking about the bad stuff. Like, uncertainty for the smart money is good because they're thinking what would be the response and what would come next. For example, one of the biggest major events that happened in the past few years was the lockdown. Like, I don't want to mention the name here because it's on YouTube, but it's the lockdowns that came in March 2020. I remember back then that was the most devastating time that could have ever been in the markets. Everyone said it's over, everyone lost their jobs, everyone was struggling in their businesses. There were a lot of suffering. A lot of people just thought their investments would go to zero, business to zero, they'll not make any money. There were a lot of fear, and everyone thought crypto is never going to go up. 10 days returns after that was 25% on BTC, which is quite heavy, right? Then what happened? 60 days in return is 21%, which is crazy, because during this thing in March 11, when it occurred, everyone lost their minds and thought it was over. Then 2 months later, we just recovered from that loss. Same for the election challenges, Russia war, where I told everyone that, look, wars are means more funding from the government, and short term they might be bearish because of uncertainty in the market, but long term they're bullish, and that confirms exactly how BTC went after 60 days. I remember actually also in banking crisis that happened in March 9, 2023, when Silicon Valley collapsed, when USDC went to 0.97. Everyone thought it is over for crypto. Everyone thought banks would completely destroy themselves and not accept crypto anymore, and it's over for crypto. Guess what? Even in 10 days returns, we got 25%, and the 60 days, 32%. So what happened during those two major events? I'm covering these two because I think that these are very important. So during the lockdowns time, what the average investor did, this is a chart basically back then, what the average investor did, I think it came March 11, yeah, it was here, one day earlier. So once the average investor saw that news, they panicked, they lost their mind, they thought it was over, and then they saw this crash here, and then they got like a capitulation that they thought crypto is gonna go to zero. They thought, I remember I was here, people thought Bitcoin $800, it's over. Everyone lost their minds, and this thing happened. But right now it's easy to judge and to be like, yeah, I know, but because it's easy. But tell me, if you could only see this, think about it. If the chart of Bitcoin today goes something like that, look how brutal it is. It's easy right now to judge and to say it was easy because you can see this. But what if you were here? Here, the average investors, the retail, lost their mind. They thought it was over. This is BTC, imagine. It's reacting like a shitcoin. But imagine altcoins, how crazy they went. So what smart money did in this situation is they didn't panic. They just focused on what's next. They knew that the economy was struggling. And what is the solution for that? Fed. And what Fed did after that? They did QE. They lowered the rates to zero, and then the money printing turned back on. And then look, it was history. So the dip was here, 19 March, where it is, sorry, here. Then look, in less than 1 month, we were almost over in this dip. We were just, I think, 6%, yeah, stuff like that. March 11, look, 11 May, for example. 11 May, we were literally at those levels. We just covered all the loss and we were in profits. So the difference between smart money and dumb money is that dumb money, I like to call the retail and the average investor, is that the average investor look what is happening and don't see about what's coming. The smart money focus on what's coming and what's the response and what's the reaction. And usually you have to be careful because online, on social media, you'll get so much manipulated from the stuff that you see there. So even right now that the conflict between Israel and Iran has started, everyone on social media is calling World War III. But I was since this war with Russia and Ukraine started. I told everyone that it's stupid and markets will go up. Of course, wars are devastating for people, for everything. I'm not talking for that. I'm talking just for markets. In markets in general, there means that price goes up, and it clearly shows that. So, but what happened during this war that started? What happened right now during Israel-Iran conflict? Everyone on social media is calling for World War III. Everyone is making fun of you of buying crypto, calling you an idiot, how you can buy crypto during wars. And all of those things affect your emotions, because when there's so much fear and you see the chart like this thing here, like this thing here, and you only see this, it's very hard to go against the crowd and think critically what can happen next. But smart money knows that. That's why I want you to behave like smart money, because you have to understand that what you consume on social media is usually, I would say, 90% from people that just talk based from emotions. So for example, what I'm noticing right now during what's going on with Iran and Israel conflict right now, everyone that is actually on altcoins haven't made any proper money, and it's normal, right? But the people that are giving an opinion about World War III, it's over, are usually the people that either haven't made any proper money so far in this cycle, so they talk from envy, to the people that are afraid of losing the opportunity to make a lot of money. So these are very two important concepts, because you're getting manipulating from the emotions of people that don't show you the data. You're just getting manipulating from people that shows you what they think, which is influenced by them not making any money. If they made any money, it would be like, yeah, it's gonna be great. So I like and I want to trust the data more than people emotions. And what I'm showing you here is all the data. I'm not showing you what I believe or what I want to happen. This is all what happened. And you might say, yeah, but past doesn't indicate that future will come again. I totally agree with you, but if it wasn't for the past, how would you base your thesis on what would happen in the future? Like, past is a very good reference for the future. If that wasn't, how you'd base it? On thin air or just your opinions, like people are having right now, that they're saying World War III is starting, where they ignore the data and they ignore what happened in the past. So be really careful, and always when a big crisis come or a big events come, always think about what would be the response, what would be coming next, what would be the thing that would change the markets, and not panic for what's happening. For example, if you panic for what happened in the lockdowns, you lost your mind. You had no clear vision to see that Fed would step up and pop up the QE and lower the rates to zero. When banks actually collapsed in March 9 and USDC went to 0.97, sorry, everyone thought it is over. Everyone thought banks are collapsing, it's over. Then they didn't realize that Fed could bail them out. But the smart money saw that Fed could bail them out. And what they did, they bought it. But Once you see the news that it's over, that Fed bailed out, you missed it. 32% for BTC, 25% for BTC. But imagine altcoins, imagine some opportunities that you wanted to buy. So always think about what's next, not what's happening. This is the number one thing that many people, I would say 99% of in crypto, fail to understand. Next most important thing is the second thing, which is the ability to judge a coin when it's up and down. And I'm going to show you an Amazon example, which is very important for you to understand. So let me try to find the Amazon chart, which is the oldest. And I was watching an interview from Jeff Bezos a few years ago, and he exactly explained the situation when Amazon stock dipped like 95%, like 2 decades ago. I think it was something like that. So where I want to get with this, Amazon dipped 95%, 94 here, which is a lot and it's brutal for a stock. If you see this kind of chart, you'd think for a stock it's over, because a stock is different than BTC. Then what happened? The rest was history. So I was seeing an interview from Jeff Bezos, and he already said in an interview that we dipped 95%, but during this time, our business was growing in every kind of metric. Cash flow, revenue, strategies, like everything on Amazon was growing while the price went down. So if fundamentals are great, but the price is down, he said it's an opportunity. When the opportunity is actually reflected and showed into the chart that you think like it's an opportunity, it's already too late and you miss the majority of the points. So why I tell you this? Because you need, as an investor, to have the ability to judge a coin when it's up or down. A lot of people in crypto, what they do all the time is they just get affected 80% of the time by the price performance. So they just look the current price performance and be like, oh, it's good or it's bad. Price performance is very important, but not more than fundamentals, because you'll miss things like Amazon that did history. You'll miss things like BTC. You'll miss things like Ethereum. So if you have no ability to judge a coin just from fundamentals and from what's going on and not only price performance, you'll struggle. And let me show you some charts here. So this is not just for Amazon. Look at BTC. It's hard to find those kinds of charts, but you can find on Google. This is the price of BTC in 2011. You can see that it rallied from 26 and then it dipped to $2. If you were a Bitcoin investor back then in 2011, what would you think? It's over. I'm gonna sell it. It's stupid. We dipped like crazy from 26 to 2. It's done. But people that were back then that judge just by the price performance and not fundamentals probably sold it here. I know so many people that sold at $2 BTC just because of this dip, and they were influenced by the price performance. This is BTC. Let me show you Ethereum. Look at Ethereum price performance on the early days. It pumped, it went a little bit high here, and then for 172 days it was down only. Tell me if you can hold this chart that just got launched. Look, because this is a screenshot, but if the chart of a coin looks like this, can you really hold it? You think like it's over. You think like it's a rug. You think like it's a scam. But people that were investors back then, if they just focus on the chart, they would have sold. But if they focus on the fundamentals, on what ETH would bring, on the team, on the developments, they probably just bought more. So same for Solana. This is Solana chart on the early days, 132 days down. Can you imagine holding this thing 132 days? And you know what's even more devastating and more that hurts you more? It's not that you're just influenced by just Solana or the coin you're having. You're influenced by other things that distract you. So for example, when Solana went down 132 days and people bought it here, a Link or other coins, they were doing like 10x, and you got everyone winning while you were doing nothing. That kind of feeling that you see others winning while you do nothing is what hurts you more than ever. And then you want to do something like probably sell Solana and just chase something that pumps. And then guess what? What did Solana next? 200x in 9 months, like 1 year, I think so. So why I tell you this? Because it's very important to understand that when the price is down and fundamentals are strong and nothing is occurred, that's an opportunity. That's what you need to buy more. That's a blessing. Like market ignorance is your opportunity. When market actually knows that 80% of market knows that something is an opportunity, it's already too late. Like look for example on Solana, when people called it an opportunity, when it already did crazy numbers, when people wanted to buy Ethereum, when it was over $1,000, when people wanted to buy BTC, today that is over 50k. Why Michael Saylor didn't bought in 2012 but called it an online casino, but they bought it right now? Don't get me wrong, Michael Saylor is the best because he's pumping our backs, but I'm just teaching you the psychology of the markets on how it works. And same works also vice versa. If the coin is going up and something is breaking, you should consider to sell some part, because you have to understand that when price go up, you become blind to just the price performance. When price goes down, you become blind to fundamentals and you miss the opportunity. So this works vice versa. If you lose the ability to judge a coin just from only price performance, you'll suffer. You need the ability to judge a coin from fundamentals, what's going on there, and not just focus on the price performance. If you focus just on the price performance, that's gonna be trash, and that's gonna be a manipulation game where you'll fall for the trick of selling too early or just holding for a long time. Because as I said, even on the upside, a lot of people actually get focused only on the positive things. Like when green candles come, people ignore the problems that, let's say, Ethereum might have or a certain coin might have. So works vice versa, but these are the two most important things that the smart money does, and they keep getting richer while 99% of people still fall for it and still fall for what's happening and still fall for only the price performance. Hope you enjoyed. I'll leave you my free webinar below where I cover how I exactly did over 200x a cycle, all my step-by-step 50x system that I've shared to discover the right altcoins. And as a bonus, you got also my my 3-phase cash out process where I tell everyone how to sell at the right time, which I already did it last time and I'm not just talking about it. So it's all free. You can check the link in the bio, and I hope you enjoyed. Don't forget to like and subscribe.